Sound check. Thank you, Patrick. All right. Hello, everybody. So the market was falling out of bed right as I come live. It never fails. Let's see. I think I got stopped out of something. I can't tell what it was, though. Maybe not. Let's see. Good. Hello, everybody. Welcome to my desktop. As people file in. Hello, Truth Seeker. No sound? I heard sound, and Patrick heard sound.
Hello, everybody.
There we go. Yeah, you're good. Thanks. Okay, so yeah, fun time to go live for you regulars. What am I looking at? Well, I'm looking at my little fund, which is down a bit today. Started up nice, and everything just sold off. So, I'm trying to lock in some gains. I've already raised a lot of cash on some stuff that I just don't like. And let me just see here. Yeah, I've raised about 20% cash. Got some stops and some other things I don't like, but as I pull up the market just to kind of look at my own perspective here of what I'm doing, obviously I'm watching the NASDAQ and I'm watching the Qs right here at this flat 5-day moving average that I talk so much about for you regulars. The market is keying off of NVDA from last night, which I think we need to keep an eye on. Now it's slowly kind of just turning into slop there midday. It had a shot to turn and go back to highs and kind of drag the market with it, but it didn't. Not in that, but I am in Tesla. I'm in a pretty hefty position in Tesla. No plans to do anything with that yet, but I might have to shave some of that off because it's been a good ride. So what I'm going to do is I'll watch this NASDAQ. If the NASDAQ does roll over and give way to this 5-day moving average, then yeah, I'm going to pull up things like Tesla that I'm heavier weight in, and I'm going to shave off some more profits. Not sell completely, but I'm going to raise cash. So I'm in hedge fund mode now. Normally I'm a swing trade surfer where I'm just looking to ride a couple waves for a day and a half, 2 days, and then get in, get out. But things like Tesla have been in since near the lows, 230, 235-ish down here. NBIS, I've been in that since lows down here at 23, 24. I don't really want to give that up. So I'm not going to go through all my trades. BBAI was last week's trade of the week. As you can see, it waited till this week to come alive. I'm going to stay in that. Obviously, the first glance I take a look at the relationship to the 5-day moving average. I want to see this blue line that's so ubiquitous in many of my charts that I'm looking at right now on the 15-minute. I want to see this 5-day, 15-minute line hold on a lot of these names. And NE being one of them. It kind of dropped a secondary the other day and didn't participate on this day. And I bought some more on the open down here as it flushed down. I love to do that. I was looking to add to something, and NNE is raising capital, but Oklo and SMR just continue to take off. And so I thought I'd add to that one right here on the open. So I'm really leaning on this line. That was a good chart to bring up to kind of emphasize what I am looking at today in a lot of my names. Let's see, NBIS is holding that line pretty well. Tesla certainly should be holding that line way above it. MindMed doing well today. Okay, so I'm kind of just paring my garden, selling a few things here and there. Anyway, hello everybody. Hello Vito. ESG is at an AI call today. Let's see, BTSG. Oh, I should bring up my do this. Just can show AI trades. It's an easier thing to do. It is there. So I have to click in the module just to see if that's what you're looking at. Oh, maybe you're talking about the stock AI. I get you now. All right. So BTSG, Bright Spring South. A lot of the names did that this morning. I was in this EVGO, not in today, but look at what it did on the open. These a lot of short squeeze names had just vicious reversals today, and that's actually kind of thrown up a red flag. So I'm seeing a few of these names, the one you just gave me, and so don't like these vicious reversals that we've seen, and they're kind of hard to recover from. But it's holding that line. AI had earnings. It's starting to get sloppy and sloshy, just like NVDA, who had earnings, starting to get sloppy and sloshy midday. So, that along with some of these vicious reversals I've seen, it's kind of got me on a little bit of guard. And I'll raise more cash today if I have to. How I bring up the Excel spreadsheets and keep them pinned. I'm not sure what your Excel spreadsheet you're talking about. I don't have Excel. Palantir, I like Palantir. Does it look decent today? Well, it's holding its 20. It's actually looking pretty precarious, and this could be a big deal for AI if that breaks today and we get a big flush. That could come, so I'm kind of wary of that. You're talking about this? This is a top list of my liked symbols. All you have to do is click the heart symbol on any of these charts. It'll add to this window. I can give you this window, but it's not going to have the symbols in it. But as you add your own symbols with the heart on the chart, that is one of my main go-to. It's not a scan so much as it's just a watch list, and so I'm sorting it by change from the close, sometimes change from the close, so I can quickly look up and say, yeah, AI and NVIDIA. These are the strong ones today. The weak ones are the quant stocks. You just see Q, 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 INOQ, qubits. These are all rigetti. So this is an example of how the market rotates. These were just, this was the shit a few days ago. You couldn't get enough quants. But what goes up must come down. If you ever saw the old Willy Wonka, the original, the best Willy Wonka in the 70s with Gene Wilder, and they're in the elevator, and he said, this elevator has to go back before it can go forward. The stocks have to go back before they can go forward. Nothing just goes forward forever. So it's how far back do they pull back? And that's what, Andy and I try and gauge. If you didn't see Andy on Trader TV this morning, he was talking about strong stocks that pulled back to the 50 and using pullback scans to identify stocks that are pulling back that are strong. I'm doing the same thing here with this one, this pullback to the 10. So here's a strong stock, Urban Outfitters. And notice the 5-day moving average finally caught up to it. So what do you expect? I expect buyers to at least put up a fight here. I don't know if they're going to win, but if they do, it's great. Then all of a sudden, we've identified an interesting area of support of a strong stock. So that's why I'm always looking at my watch list, and I highly recommend anybody can load that cloud, and then it won't have a symbol list in it. But if you'll notice when we go to configure, it's nothing. There's nothing. It's just a symbol list. And I've turned on all of the following list, and it's called My Liked. And everybody has one called My Liked. You just have to go in here and find it. And what enables it is when you click the heart. I'm not going to click Urban, but if I click the heart and give it 15 seconds, it'll populate in this window. Removing it is a different story. And Is there a link for Trader TV? Yeah, actually, I've got one. Matter of fact, I've got one. I need to pop out my. Let me get that link for Andy's workaround this morning. Hang on a sec, because I gave that to somebody else. And it's 15 minutes in. It's a good segment. All right. Can you make those types of lists from what shows in the channel bars instead? Make the info on the channel bars. Let's see. Yeah, I don't have. I forgot to open something that I wanted to open. We can let this run during the market or during my segment. This is give me a market pulse as we're sitting here waiting for a market that's teetering back and forth. And look, we did find support in my 5-day, so I'm going to let that marinate there. Keep that right there. Can you make those types? No. The channel bar, and I recommend using our docked channel bar, new dock channel bar, because it gives you this workspace. If you just go to a blank channel bar, it's always going to override your existing layout. And most people don't like that. So we built a container called dock channel bar. You can build your own custom channel. You don't have to be limited to what you see or show more down here. We do have what's called a custom channel. And at one time, I think I had a custom channel where, oh, I didn't mean to do that, but I did it. It's going to populate that. I don't want that. Let's close that. I don't want that. But the point is, I'm going to close. Whenever you make a mistake like that, here's a nice trick. Just do not save. Relaunch. And let the product relaunch. So the info in the channel bars, you can't make it smaller or anything like that, Vito. You can essentially take this layout or any layout you have and turn that into a channel bar. That's called a custom channel. Am I bearish short term? Actually, I'll tell you I'm not. And curiously enough, I've been telling Annie the last couple of days, we've just been kind of going sideways. And it's been, I think I mentioned it last Thursday too, we've been frustrating the market. The market is not getting, when I say the market, I mean shorts and longs. The people who are itching to go long are not getting the deep pullback they want. Nobody wants to feel like they're chasing the market. On the same aspect, you've got a lot of stocks with big short floats in there. And those people are afraid to cover here. They're waiting for a pullback that they can buy and cover and get a better price to close their shorts. But if they can't get a pullback, then everybody starts getting antsy and the market doesn't go anywhere. To me, that's just a recipe for a tinderbox, just waiting for a headline to boost the market up and out of this range we're in, because the markets can consolidate in two ways. They can pull back in price. That's the more traditional way, consolidating by pullbacks, like the quants are doing today, or stocks or indexes like the Qs and the NASDAQ and the SPYs. They can consolidate over time, which is a sideways consolidation. And that is the more bullish case of consolidation. So usually sideways consolidation resolves itself higher. So in that respect, Vade, nor I am not bearish short term. I am holding pattern short term. I am just waiting and watching, and most little short-term pullbacks are shallow. That was the deepest one we've had. And if you consider it, this is actually is pretty constructive and pretty healthy when you consider we started the day up here, even higher pre-market, and we've given back all of this. So if this is the worst we get for today, believe it or not, this isn't like a yoga breath. It's a big inhale. And now we've got, room and energy and enough air in our lungs to go higher. I'm not bearish short term at the moment. If we get to the end of the day and we have a red candle that looks like this, I'm going to be a lot more cautious. So ideally, this needs to be the low of the day for me to hold that opinion that I just gave you. How do I keep things pinned down and then save it for later? Don't use the pinned windows. Let me just tell you right off the bat, there's a function called pinned. Don't use pinned, because what that does is if you start dancing around different layouts, those pin windows become duplicates. And before you know it, you might have 8 of the same window and not realize it, and it starts to degrade your performance. If you think that might be the case, you can always check it by coming to this health sign there and seeing pinned windows. Oh, I've got one pinned window. I wonder which one that one is. Well, regardless of what it is, I can go Windows, close all pinned windows. Whatever that was that we just closed. If you mean like a workspace, you're going to have to use a dock, Vito, because these are all free-floating windows. I prefer the free-floating windows, and then I'm just constantly saving my layout. Let's check in on the market pulse. Oh, was that the window I closed? Why would that have been a pinned window? Oh, I know why it would have been a pinned window. Because the person that gave it to me had it pinned. Weak. So weak. So this window that I opened up earlier somehow is showing up as a pinned window, but let's let this run again. God, I wish I had let that run. Shoot, because we had a nice little turnaround bounce there. And I was trying to keep doing some housekeeping there. I closed it by accident. Okay, where do I post a market breadth? Well, this would probably be a good market breadth indicator right here. We don't have market breadth per se, like as a headline across the top anywhere. You just got to kind of figure that out yourself. I look at market sectors. That's a complete breakdown of sectors. I can see what sectors are strong and what sectors are weak. So now as we're bouncing here in the NASDAQ a little bit, and hopefully the SPY also kissed the 5-day moving average perfectly. This is why I use this indicator and not many others, you guys. So it's given me a bit of hope here that might have been it for the pullback on the day. And now maybe you've got people who were hoping for a deeper pullback down here in the gap. Maybe they're now chasing, and shorts are getting a little panicked, but this is a good indicator to just kind of watch how the buyers and the sellers. This is your breadth right here, Vito. Let me give this to you. All I have to do is I've got it in my clipboard already. I just click paste, and anybody else that wants it, you can load market breadth. It's basically looking for highs versus lows. Highs, pre-market, short-term on the day versus lows, pre-market, short-term, and on the day. Yes, what you do, Vito, is you create the scan first. So create the scan you want with SMAs, anything you want. In my opinion, the less noise, the better. Just focus on one simple thing. Like in this case, I'm only focusing on strong stocks that pull back to their 5-day moving at. Look at Urban, just look at that. See, this is the kind of thing you use trade ideas for. That I use trade ideas for. This is what I actually might deploy when we start simulating the money machine, quite honestly. I've got to deploy something. So stocks that are strong and have pulled back and maybe hit the 5-day, I'm interested in staying in them as long as they're staying strong. So that's what I have scanned for. Now let's say, Vito, I only want to look at this scan with a list of 100 stocks. Well, first thing you have to do is you have to create that symbol list. And then in the configure, every configure has it. Here's your library of lists, all right? But what you do is you just say only this thing, only the list. And so right now I've got all symbols, so it's scanning the entire market. So it's a 1-2 punch. You have to create your scan first and then assign the symbol list to that scan. Turn those back on. Oh, that's what it was. I had to restart my computer. I forgot when I zapped it. That's why I lost this. Okay. So anyway, since I've turned it on, let's kind of reanalyze this. The NASDAQ and the SPY are still continuing to hold a decent bid, but they're running into what I call the pinch. All right, this is the 10 SMA. We've got a nice floor with the 5 SMA, but this is going to be a pinch here. And at some point, one of these two is going to give way. I'm hoping that one's going to give way and not this one. All right, hoping NBIS stays a bit flat. Yeah, I don't mind that either. I love NBIS. You bought 200,000 worth. Okay, nice. On the tariff dip last week, I also bought the open, but I just bought a couple hundred shares. I didn't buy 200,000, but I was adding to an existing position. I've been long that one for a while. Maybe you heard me mention that earlier. It was also a trade of the week, I believe. And you're saying, but sold some covered calls at the strike, might have to roll those. Yeah, I'm not an expert when it comes to massaging options along with open positions, covered positions. What I've been doing a lot of lately is just what I call trade arounds. And what I did in NBIS was a trade around. So I was long. I think I took a little bit off up here. Whatever I sold up here, I bought back on the open this day, the day you bought. So I just kind of trade in and out of the common. I don't do much options. But good on you. I think this is a huge, not only AI, but I think a huge quantum infrastructure play. And if we look at it technically, it's probably going to really grind around these levels for a while. It's spent a lot of energy getting from the low 20s to doubling up here to the 40s. So I would expect a lot of give and take. The more sideways it can go, the more energy it'll pent up and maybe use to hopefully break through that blue line. As you can see, that's why I'm using the price alert. Right click, set price alert, to just let me know when today's high was taken out. Obviously, I set that price alert today, and it will work for a while until it triggers. So look at this downward. So we're seeing, I don't even have to look over. I'm seeing a little bit of decay there. So if I pull up the NASDAQ, I would expect to see, well, didn't expect to see that. Still holding up. Still holding up. Anyway, let me catch up here. Vito, I got to keep up with you. Typing questions faster than I can answer them. We are going to be able to see, you're going to be able to see the money machine in a demo simulator mode, which is what I mentioned. And that was why I mentioned on the side there that when I do get my hands on that, I know Dan mentioned to you guys yesterday, it's going to start internally so the traders can play with it and give feedback and maybe identify any additional bugs that weren't identified or scenarios that they didn't think of. But one of the things I might deploy is something along those lines. I don't want to chase momentum with the money machine. My strategy when I go to the simulator, which is what everybody should be doing, not deploying strategies with real money. So I'm going to deploy this pullback to the 130. I'm going to have to convert it to a top list and a tree map. That's okay. I'll figure out a way to make that work. But that's going to be my concept, to try and pick up stocks like URBN and get a nice, good risk reward. And then as long as they continue to build green, that money machine will keep me in the trade. All right, okay, when it dipped to 36, I jumped on it. Yeah, I think you're talking. Yeah, so did I. I added to what I already did. And again, that's me trading around. So I probably had a 2/3 position, if I recall correctly. I wrote a nice position and sold a third up here. Let me just tell you, this usually never ends well when you see a double wick like that. It's called tweezers. Usually you're going to get some sort of a reversal. But in our case, the reversal was short and painless. That gap down served as enough of a pullback. Palantir used to do that all the time. It just shows the true strength of a stock. When it gaps down like that and the bell rings and every single person recognizes that value and you get green candled the whole way up. That's pretty good counteraction to those two reversal tweezers there. So yeah, I'm long NBIS, and I had no desire to really want to do anything with it, but just sit on my hands with that one. What's my favorite feature of the software? Some of the simpler things, quite honestly. I like the price alerts. Let me just put it this way. If I was a new trader, I would put TradeWave at the top of the list 3 times over, because I think that's just a tremendous tool for new traders. If I just turn on my FX and turn on TradeWave, see, I know what I'm looking for in a 15-minute chart, but new traders don't. So NBIS has technically, on a 15-minute time frame, it actually just gave us a sell. We had a buy signal here for the moment, but then we got a sell too as well. So we can pull up any stock that we want. And I know Dan mentioned yesterday that we'll be able to maybe even try to tune the money machine into some trade waves. But look at my Tesla position. Tesla position, technically speaking, and I can look at that without those buy and sell tags and go, I feel comfy in this one. But that buy tag tells a newbie, a new trader, hey, technically speaking, the moving averages are still happy. So there's no reason to get out. So that by far is my favorite feature, but I don't really use it because I don't need to, right? Because I've got 50,000 hours of trading experience, but this is a tremendously useful tool for somebody who only has a few hours and they're trying to just make sense of everything. Because other than that, when you first look at these charts as a newbie, it just doesn't make a lot of sense. Here's an observation I was telling Andy, that particular ETF right there we were just looking at, and TLT, right? Here's our 20-year treasury. Look at this. We're breaking out of yesterday's high, which means, for you econ majors, what happens to interest rates? They go down. What was the market fearing last week? Interest rates hit 5% and 20, and people got scared. Well, that moment of scared was actually the contrarian moment. As usual, there's probably a magazine cover that talks about the 5% scare, and magazine covers are notoriously contrarian. The masses and the herd usually reverse. So anyway, the IEF and the TLT are moving higher decidedly and decisively, bringing interest rates, or telling the market and telling the Fed, you're late. So the more it does this, we could be one emergency mid-session interest rate cut. They might not even wait. I've seen that happen before, where they don't even wait to cut rates. I don't know if that's going to happen this time, but if this kind of action continues in the bonds and rates keep getting pushed lower and lower, that's a really, really good thing. And look at, as I'm speaking here, right? See how this green line is giving me short-term breadth? The buyers are now outpacing the sellers. So to answer that question, this is also a great tool. I use other things like I can see, kind of get a feel for a new trader that might not see what's going on. This something's happening here. Something's good is happening. Look at this green line. I don't know what it is, but something good is happening. So let me share this with you guys, and you can use this too. I don't think I've done that yet. Just call that a market pulse. All right. And it's funny, as I'm sitting here talking about the Treasury, right? It seems like stocks are paying attention, getting some nice bids right into that top end of the 10 SMA that I'm looking at. So the minute, in my mind, we're still trapped here, but the minute we get a nice green candle that closes above that upper line here, I think that's going to be putting the short sellers on notice. You better start covering some more. And the people who are waiting for a pullback, it's going to put them on notice. You better start reaching up and buying some more, because this market looks still pretty bullish to me. This sideways action that just refuses to sell off usually resolves in that kind of a deal. What do I think of NUKZ? Looks tired to me. Vito looks very tired. There's a lot of space between the current price and at least the first line of support. A lot of space in here too. Bring this back down. I think you were talking about NBIS market cap 7 billion. Is that the one you were talking about? Yeah. Yeah, for a global infrastructure on the new paradigm of building out hardware for AI and quantum type stuff, I think they're the ones to go for. If we revisit the summary, provides infrastructure and services to AI builders worldwide. Prestige worldwide. Here's an inside movie quote for some of you. Maybe you. Who do you like to learn the candles and price action from? Vito, there's a book called Japanese Candlesticks. The author is Steve Nissen. And that's the book it's kind of the holy grail of interpreting candlestick charting. And you'll learn every name in there. And not only that, when you read that book, you can come back to trade ideas. And then when you go to configure under search here, we've got this nifty thing called category candle pattern. So you can drill down into all these hammers that you're going to learn about at Hanging Man, you're going to learn about in that book. And you can apply these. I think these are decent scans for like 30, 60-minute hammers, things like that, or reversals. So if you didn't know that, now you do. Go no go is so it's the same thing as trade wave, but it's more nuanced because of the color gradients. I'm not going to bring it up, but you just take my word for it. It gives you 4 different or 5 different color choices. I can't remember. So you kind of go from extreme to moderate to neutral, and then back to moderate bullish and then extreme bullish based on the coloring of the chart. So what it can do is it can kind of give you a little more heads up that, hey, this is starting to maybe turn. So I don't mean to discredit it. They're both good in their own right, but you're going to get more nuanced and maybe even, you could argue, an earlier warning. Like if you're watching a stock and you're stalking a stock that you like, and you're watching, and you're like, man, this thing it's getting ready to turn it's neutral, and I can tell it's probably pretty close to turning maybe slightly bullish. I'm going to jump in now. So it can give you an early warning and probably even help you, learn charts better. Now it's done on non-candlestick charts. So you're always looking at high-low close charts. For those that are curious, let's go ahead. There's no reason not to. figure out how to get to those. No, just pass up something over and over and over. Okay, so once we open Go No Go, and again, it's an add-on, so it's an additional subscription. You'll see it defaults to the old colors, but the minute we start clicking into, you start to get the colors. Okay, so there's an example of the different colors. It's a small one. Let's find a better example. Okay, so here's FSM. So you've got your neutral color here is orange. And so rather than wait for the green candle, you could say, oh, it just went from bullish to slightly bullish to neutral, but I think it's getting ready to switch. And then so it might give you an earlier idea of when you can see that the colors do change a lot. So it's more nuanced, like I said. And then here's the downsides, bearish to strongly bearish. And the channel basically gives you ideas. There's DJT. It's actually on the daily. So now it now went from in 2 short days to slightly bullish to neutral to actually skipped pink and went to full on bearish. Funny. Let me look at my charts through my prism. DJT. Yeah, it's just getting hounded. That was a rough one. I wasn't in it. I did buy some on the first day pullback, and I'm just kind of sitting. I don't like what it's doing here, but I've often said when some bad news blindsides, like usually it's a gap down after bad earnings, it's hard to recover that first day. I jumped in a little early. I tried to jump in just at the low near that 50 SMA, but I had to remember, I should have reminded myself that when this happens, when you get a neck snapping, blindside blow, and it takes a good 3 days, maybe 3 or 4 days to wash out everybody, including the technical people that go, oh, I'll just give it one more low. It just keeps doing that for a few more days until it just exhausts everybody and wears everybody out. And technically, that usually takes about 3 to 4 days. So that's what I expect for that DJT. All right, let me see here. So that's what I think of Go No Go. Ever had a look at NVDA? Let's take a look. It was a huge position at one time. Here. Actually, I'm going to put it right there. ENVX. First thing I do is silicon batteries. Okay. You were probably liking it back here. And then look at that giant topping tail. It was over. When you see stocks do these just blow off tops like that, you got to just walk away because it just gave 6 months of discouraging pain. But now it's breaking its downtrend, created a higher low right here, higher low right here. So doesn't look bad. It looks like it's trending higher, and it's probably going to run right smack into this 200-day moving average if it keeps holding up. Do I analyze float? Yeah, I do analyze float. I'm always looking at float, because I'm playing a lot of small cap stocks like Quamco, 22 million float, ARQQ, 6 million float. And I like it when they have a high short float. So I could go through my short squeeze scan and I could quickly look to see 52 million float. That's usually a pretty good recipe. Low float stocks that have a high short as well. Like this one, that's not bad. So yeah, I'll look at that. If you want to learn how to do anchored VWAP, there's a whole book on it. There's many different ways. It's basically just anchoring the VWAP from a certain point, and Brian wrote a book on it You can do it from gaps. You can do it from earnings. You can do it from IPO, year to date. I use the 5-day moving average to gauge key support on the intraday, and I use the 50-day to gauge key support on the daily. You can see they're the same color. So they mean the same thing to me. 5-day on the 15 and daily is a 50-day SMA. Those are both key levels for me that I keep an eye on. Exhaustion is like, it's that you're going to read that book. It's exhaustion candles, reversals, bottoming tails, hammers, hanging men. Those are long tails. And I forgot what stock it was I just looked at, but it had a long, yeah, it's what it was. I'll show you. It's what he asked me about. Is it ENVX? ENVX. What signals a reversal? Something like this. After running from 794 to 16 in a period of 3 weeks. And then at the end of the day, you look at the candle and it looks like this. You want nothing to do with that going long. Just take it off your screen, take it off your watch list, and never look at it for hardly ever again, because it's probably broken until it sets back up. It had a chance back here, but once it did this and broke through all these averages, it was done. Now it's trying to rebuild itself again. Higher base camp, higher base camp. That's what I see. Yeah, the Candlestick book by Steve Neeson. You got to scroll up. You covered it up. It's called Japanese Candlestick Charting. The idea behind anchored VWAP is you're anchoring a point in time where everybody is either above water or below water. So IPOs are perfect. On the opening price, the people who bought above the VWAP are still happy if the price stays above. But once it's like the crowd, you're seeing the crowd shift from one side of the lifeboat to the other as they cross through that anchored VWAP, because now all of a sudden 60% of the people in this trade feel underwater, and you're more likely to lose the bid or lose enthusiasm. That's the basic line. And you can apply that towards the entire book, whether it's a intraday. There's many different places. That's the thing I don't like about anchored VWAP, is that there's many different ways you can draw it. I like to keep things simple because the 5-day moving average never changes. It's always anchored from the same 5 days, and the 10-day SMA on the daily. And so those are my go-to sturdy ones. Is there an indicator that doesn't exist you always wished you could create or thought would be interesting? That's a good question. It's thought-provoking. Indicator. Well, I'm always talking about contrarian, so I would start with that. Like, how could I be like super contrarian? A lot of people will use Bollinger Bands for that. Like when they see stocks, really breaking down through the lower Bollinger Band, it's like stretching a band. It's got really nowhere else to go but back up. So, probably combining something with, standard deviations and Bollinger Bands, and maybe even the icing on the cake would be like a reversal hammer candlestick pattern at the end of the day, where everything lines up at the end of the day, where you go, oh my God, look at the thing, look at the torment this thing went through all day long, only to reverse at the end of the day. And I'd bet my bottom dollar that it's going to gap up and rip tomorrow. I'd like to see that at the end of the day, 5 minutes, 10 minutes to go. You should stay away from stocks under $1. You should stay away from trading stocks pre-market, no matter really what they are. In my opinion, if you're new, you should stay away from stocks that have a very if you're not an experienced trader, a low float stock, like a stock under 5 million shares, it can tear you up pretty quick. When you're wrong, you want to have a bunch of steps that you can jump to, and the lower the float, the less doors you can exit through. And when you're a new trader, that's no fun. So let's look at our market pulse that we pulled up here, and it's basically trending and giving us the nod that the market's not interested in selling off. The new highs are outpacing the new lows, even though we're caught up here in the higher end of my little band. We've got the treasuries one tick away from high, so interest rates are not a threat today. I kept telling Andy, I think at some point, if interest rates keep doing this, it's going to be very hard for the sellers to get a sell-off in the market. It's just going to have to pay attention if it continues what it was paying attention to last week anyway. A really good book to read is The Candlestick. I already gave you that one. Another one's called Trading in the Zone. Trading in the tackles the psychological aspect, which you must master. And then I would say Brian Shannon's book, Anchored VWAP, but let him explain to you why those work. But he also talks about the 5-day moving average in there as well. And I learned this from him. So you really can't bracket an order because you can't have more than one sell. Well, let me rephrase that. You can have like, well, I'm not sure actually, because I don't use the live interactive brokerage interface. I don't think you can have a target live, which is a limit sell to live above, and also a trailing stop live at the same time, because what that is 2 live sell orders. You can have a trailing stop open, but I don't think you can have a bracket. And either Pepe or Chris can correct me if I'm wrong, but I don't use that. Yes, Brian Shannon, Alpha Trends, is obviously an established, he's written 2 books now, and he's my friend, and I've known him for a long time, and we trade very similarly. We talk throughout the day. Most of the time we have the same similar kind of style, but I've kind of moved over to the hedge fund mode for the moment, where Brian's still in swing trade, jump in, jump out mode. You can have a bracket, stop loss, and target. Yeah, I guess that sounded familiar. There was some situation where it does cancel out. So it's got smart logic where if the limit sell got hit for your target profit, the stop loss order would cancel. Bracket orders. Yeah, so I misspoke. The guys who are using it corrected me. So that's good. So as I look at the market, I see exactly what I expect. I see it get caught up in this net here, this 10 SMA. That's why I only use 2 15-minute indicators. My solid, for the most part, for now, this is our support for the day. But the short-term momentum there's no momentum in the market. It's been flat for a day and a half. Whereas back here, we had momentum. We had a slope to the 10 SMA on my 15-minute chart. And once it starts to turn above and turn up and the price stays above a higher sloping 10 SMA, now we're in momentum mode again. Yep. I got to see 10 minutes till. All right, I got 5 more minutes, guys. So I do apologize. If somebody was sent here for like specific support, you got 5 minutes for me to help you. Now, as I'm looking, look at how these 2 correlate. See, I see what I need to see right there, and I expect to see it, but I'm getting confirmed here in the real life pulse of the market pulse that, the buyers are waning a little bit. And so we're getting a little bit of pushback. So all we've had all the last 2 days is a back and forth tennis match between the bulls who want to buy pullbacks and the bears who want to sell up here for whatever reason. So we've got ourselves a good old fashioned, real tight range. And I feel like it's going to resolve higher, but just know I've already got like 2 or 3 stops in. If we rolled over and had bad news, I'd probably get stopped out of a few things real quick. And then by the end of the day, I would reevaluate, and I wouldn't mind going home with a lot more cash. But for now, I'm still about 80% cash. I'm sorry, 80% risk on, 20% cash. Is there a video series, Mark Douglas on YouTube? Oh, there is a video series, Mark Douglas on YouTube. goes over trading in the zone. I always forget his name. Thank you, Brian. Mark Douglas wrote Trading in the Zone, and it's a nice kind of offshoot from learning technical analysis. He's almost like your trading coach or a sports psychology coach. So you want to have that in your bookshelf. You want to be able to look at the market and go, oh, okay, well, that's a bummer. The minute you start getting emotional and making your decisions irrationally and emotionally, you're done. You're done for, and you're not going to improve. So he's got some really nice tactics and tricks to help keep you mentally in the zone. That's why it's called Trading in the Zone. Well, Brian just mentioned, Vito, Brian just mentioned there's a video series. Mark Douglas says, I don't know if it's on YouTube. Any good videos on YouTube? Well, Andy does a good series every morning for the Trader's Eye, which is nice. For market breadth, you're looking at it right here. It's real-time market breadth. It's adjusting in real time. Buyers versus sellers. So since I've started this tool is telling me that the buyers are, since I've started and let this thing run, the buyers have, for the most part, been in control. Back here, the market could have taken off, but it didn't. Sellers jumped in. Now these are new highs. New highs just dropped below new lows. But, you know, that's about the best market breadth indicator you could have right there. I dropped it above, Vito. I'm pretty sure I did. Yeah, Pepe's on it. All right. I think I'm caught up. Let me just check my stuff here real quick. Oh, it's degrading. Yeah, I expect that because of this little red tick here. But it's funny. I'll tell you, just looking at the P&L of 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 open positions. Just one little red tick. You can see the P&L bounce around. That's hard to get used to as a trader who likes to manage their risk. I've sat through some swings that if you'd have told me I was going to sit through a year ago, I would have said no way, but I have been. But I'm trying to lean on the conviction I think we have. I'll just end by saying I think we're at a pivotal point in time here where there is obviously a new administration, but there's some serious new paradigms being deployed. And I see CEOs out there making some big moves. And I think this is a moment in time where stocks like NBIS and AI and quant stocks and I think even Tesla, I'm so bullish on Tesla. I'm actually overweight in Tesla. They're not just a car company. They are an AI company and a robotics company. And 10 years from now, we're probably all going to have an Optimus robot for the price of basically a car walking around the house doing the tedious crap for us. There's probably a setting on that called closed P&L. Vito, it'll be in the column settings for Brokerage Plus. Just sort through right click on the header, and you can go through and look at the column settings. Be like right click there, columns. So P&L, total P&L. Experiment is going to be one of these. Might be total P&L. All right, guys, got to run. Barry's interrupting me. Good talk. Very important. Thank you. Got to run. Talked out. Vito talked me out. Will the bots expose us to more microplastics? Probably. Yeah, who knows, V? Good questions. All right, I got to run. Sorry. Take it easy. Bye-bye.